Hello and welcome to another weekly summary, guys. My name is Jordan, and today we're going to talk about sRs Pro and the Divergence University in the same video, simply because previous week's volatility, and actually not just previous week's volatility, the last 2, maybe 3 weeks market conditions are not really allowing any big moves for the market. The volatility is low, and basically we're in kind of consolidation zigzag modes, which requires from the traders, especially if you're trading our way, our style, our methods, this kind of market requires from you to be a bit more, how should we put this, I don't know, more conservative, waiting for the actual setups to appear on the charts, waiting for these single assets or instruments to provide you with the actual setups, and then go ahead and attack them. Okay. I don't know how else to explain this, but it's really crucial, because if you're trading the exact same way you're usually trading when the volatility is normal and there is presence from the big guys on the market, if you're treating this market condition same as the other market condition, it's not going to end well. Okay. And usually when you look at the performance curve, if you're making money, most of the times you will have profits and losses, right? Trading is a sum up game. At the end of the day, it's not just a straight line where you have only profits, right? You will be experiencing profits and losses, and the importance is, in the long run, that these losses remain smaller than the profits. This way, the performance curve is going up, right? This is what we call drawdowns. The performance is going lower. Excuse me. So once such conditions appear and the market starts moving in a very nasty way, breakouts don't work out, divergences don't work out, whatever the method is, right? It stops working. Lower the risk. Then super important part, besides lowering the risk, is to have multiple strategies. I'm not talking about 10, 15, 20 strategies. I'm talking about 1, 2, 3, 4, 5, maybe even trading methods or trading strategies. So you might have one trading method which is showing you the directions, but then the way for you to enter this trend or this specific direction on the given asset, for the entries, it could be applied many things, right? And this is where we're talking about diversification. Because if you're trading trendline breakouts or high-low breakouts, just any breakout strategy, right? And the market starts creating these false breaks and false moves, you will be killed immediately, right? And then all the profits you created, they will be taken away from you, and you're back to scratch, back to zero. So when you have different methods that work not simultaneously, not working in the same way, giving you the same signals, this is not diversification. Okay, it's like trading euro dollar buy and then dollar franc sell, right? Very strong correlation. You trade basically the same thing with twice the risk. This is not what we want. We want to have different ideas when it comes to the entry. Okay, so if one is breakout, the other one could be divergence, for example. The third one could be using price action, applying different methods of price action than the pullbacks and buys, right? All these things will be providing you with an entry, will be giving you a signal in the given direction that you're looking for to trade in different conditions, in different times. So if the trend line breakout, for example, no, actually, let's start with the divergence. If the divergence fails, this is the very first signal usually, right? Then you don't have most of the times trend line breakout, and you definitely don't have this kind of entry if it's going to be failing, right? The divergence pushes, creates the divergence, and then it fails, right? So these two are saved, and by the time, hopefully, by the time the actual continuation in this direction comes in play, you will have just one loss, and then you might have second attempt, divergence, which works, trend line breakout, which hopefully works, and then it comes this market structure, price action structure, which also works. Of course, this is just in theory, right? Simplified example to make sure we are all on the same page, but this is basically the idea. Diversify the entries in the given direction if possible, right? Don't put all your baskets in the same, sorry, all your eggs in the same basket. Because in moments when your strategy stops working, and these moments are cyclical, okay? Every strategy works and then it stops working. Most of the time, this is what's happening with most of the strategies. This is what we call drawdown periods. And during these drawdown periods, you want to have a strategy which is in a different cycle. So if this is my strategy once, cyclical period, and it slowly goes up, right? Then I want my strategy two. How should we do that? Like do this, right? To not overlap. When this is in a drawdown, I want this to be going up. When this is going up, I want this to be in a drawdown. And this is where a very simple math comes in play. If I'm making more money on my profits, and I know that this purple strategy in the long run is making money, and I know that the yellow strategy in the long run is making money, I know that during these periods, I will be consistently in profits or at least in break even, not going into the deep losing periods. Okay, this is basically the bottom line. In theory, in a perfect model, how things should look like, at least in my opinion. And here you can mix up more strategies. The more you have, the better. Of course, there will be slight fitting, right? We cannot do that absolutely the way we want it to be, right? Perfect diversification with perfect balancing. But if they're using different methods, you will get that in the long run, and it will be helpful. Anyway, enough theory. Let's go ahead and check out some of the examples from the previous week. So previous week starts from the 24th, right? 24th up until 28th. That means 2 pound cut and kiwi cut. This is SRS Pro. You can find this table in SRS Trendrider, sorry, srstrendrider.com under the performance tab right there. Pound cut, the first of the two. Push up, of course, blue predominant color. Look at this beautiful setup, at least in my opinion. Breakout after an attempt to go lower, and here we had some of the red candles, you see, so that makes sense to be a possible reversal to the upside. In reality, pound cut actually on the 4-hour chart was kind of trading in a range here. So that makes sense to be like this, right? Near the bottom, we're going to be looking at red. Near the top, we're going to be looking at blue. This is why we want to be checking also the price action. And here we can see that the price wanted to continue lower. It formed some kind of consolidation period here, and then it broke up to the upside. After this breakout right here, we also managed to clear this high as well. From that moment on, the price pushed up, pullback, testing, first time, second time, third time, fourth time, right? You can see that, I hope. And then we're looking for continuation. This is an ABC, right? Not ideal, not perfect, but definitely tradable, in my opinion, especially as it comes from that zone, the level, the bounce. I love it. If you want to be a bit more conservative, not aggressive, just a bit more conservative, you can find the horizontal, because usually trend lines are first entry, right? And then you have highs or lows respectively to the downside, which could be applicable for the actual entry. So in this case, this is going to be the high. Now, what's interesting for me is right here, that zone. You see this level? From the closing prices and opening prices through this, those are not dodges, I'm not sure what kind of, well, the second one is dodgy, but basically the spike candles here, the red ones. And then again, you see the openings, the closes, and here more level. So basically these highs, the two highs right there, those two highs, if they're broken, yeah, you will be definitely missing out on opportunities here, because we can see where the breakout is, we can see where the actual signal came, and then this is the high. So if you're going to be trading the conservative part, especially compared to the high, it probably gives you one-to-one, but I will be waiting for a bit of a pullback here, okay, just because it's too high. Okay, so if we break just a few pips, nothing crazy about it, just a few pips to put the scales in our favor, right? You can see that now the risk reward is slightly in favor to the reward. So this is also another approach which could be applied here. So once again, here is the breakout. Okay, it pushes immediately to the downside, and here it is. If you're waiting for a more conservative approach, in this case, you're going to get it. So let's see where the zone was. If this is the zone approximately, right? You want to see the price giving you exactly this. So if that's my zone, I will be looking to attack slightly above, just a few pips above it right here. Okay, to look for a buy. And then possibly, not possibly, I'm definitely going to protect that zone. Okay, just a few pips below it, looking for at least the top to be taken. That's about pound cut. Then we have Kiwi cut. Same story, also looking for the buys. The setup here is much clearer. Honestly, guys, I'm really becoming a huge fan of these consolidations, especially when they're happening on the higher time frames, which allows me to trade them aggressively. Now, in this case, this is just the 15-minute time frame, which means I'm not really able to go ahead and do that aggressively, but this is what the market is providing, right? This is a consolidation pattern. We get a breakout. Now, this is not really a high. I wouldn't consider it a more conservative approach. I'll just consider it some kind of extra validation, because even though that might not be a real high, this is the high, right? That's a pullback inside of it. It might not look like it, but this is pretty much it. So if this is wave one in a straight move, I wouldn't put here double waves or anything. It would be too forced. That could be somehow treated as a double wave. Then we have push, pullback, push. This is actually creating a lower low a bit. So it goes and forms the double wave inside probably 5-minute chart or so. But yeah, the important part here is, you see this level? We got the breakout, false break here, failing to hold, another attempt, and this is where the actual consolidation starts forming. So the actual high is right there. We didn't break above it, but look what's happening on the higher time frame. It's absolutely madness, craziness, how bullish this can be, right? Plus, look what's happening. Before that, we had bullish, another consolidation, breakout, super strong bullish momentum. When we have this strong bullish momentum, usually it's a good idea to drop to the lower time frames, like the 15-minute chart, maybe even lower, because if you're waiting for a setup on the higher time frames, you're rarely going to get it. and most likely these moves are going to happen without you. And only then, after this strong momentum, let's say this is, excuse me, wave 3, right? It pushes, so some news are triggering these strong trends. So this is the 4-hour chart. It moves pretty much in a straight line. Then things start to settle down, and then you will start looking at 4-hour chart or 1-hour chart, pullbacks or whatever, and then you'll get setups there. Otherwise, if it's too strong, learn to identify those and drop to the lower time frames if you want to trade them. If this is not your thing and you don't like going lower, simply ignore it, right? There is nothing wrong if you don't trade them. I'm just saying how I personally do it. So if you're also looking to do that, it might be helpful for you. So here again, we see that it pushed lower and pretty much, well, it's not a straight move, but after a bit more of consolidation, it goes lower. Now, since this is failing, I would start immediately following for a potential horizontal range, larger one. The problem with this one is that you don't have a second touch point, at least on the top. So it is a potential, but then you have a single top and first, second, third, fourth attempt to go lower. This becomes trickier, okay? All right, this is pretty much about SRS Pro. Now let's quickly check out DU. We said 24th, right? Yeah, 24 gives us pound cut as the first one. Again, pound cut, the idea here is to go and look for the buys. And the range we've been talking about, I guess we can see something like this here, right? Also a range, May 7th. I'm pretty sure this is also the 4-hour chart range. But anyway, H1, looking for the buys. This is that a divergence here? I don't think so. I think it pushed, but since you're in the range, you don't need to expect the MAs to provide you with divergences. Histogram alone is more than enough. And here you have the first false break and you got the divergence right now. Here, to be honest, guys, I was looking for this setup to actually trade it. The problem is that I was looking, it was further in the week, I guess, maybe somewhere around that point. But I was looking for this zone to be cleared. Basically, the spike zones, you see it right there. And I think we did something like this, a few attempts here, and then it moved up. So unfortunately, my extreme zone was never reached. But if you want to be trading the best setups, you gotta be ready to give away all these misses and not stress about it, right? Because once it happens and you actually get it from here, then you get the perfect risk reward ratio, or let's say the best risk reward ratio available, especially if it works and then it breaks, then things become absolutely fantastic. Anyhow, basically range, level, continuation, and this is what I was talking about. You see, we had a few moves here which never managed to go ahead, and where was that? I think it was even lower, something, right? And then it pushed to the upside. Anyhow, moving on. 24 euro pound. Euro pound was never on my list on the previous week in terms of divergences. However, it looks good. Simply talking about divergences, I definitely would be agreeing with this because look, we never got the ending divergence on the histogram. It started pushing to the upside, moving in some kind of direction, some kind of structure, which I'm not really able to identify and label here, but the lack of divergence here is suggesting that we might be looking for levels, and the levels are starting from this one. False breaks, etc. Then you get breakouts, and one way or another, this thing started actually pushing upwards, right? So I guess we can do something like this, and now we got a breakout above this structure, which means first of all you should be paying attention. Let's do that from the beginning. Actually, no, when you do it like this, but this is really not parallel. Anyway, if you do the parallel, I think you get the line like this. But even if you don't, the most recent high, which is not subjective, right? It's kind of clear what's happening. This is the high. We get the breakout. So if you get the breakout without divergences against, right? And then you get the hidden divergence, which I don't think it ticked up. Maybe it did. But we can see what's happening. First attempt here, we see that two waves, boom, boom, holding it. And then it starts to play in this zone. So I would be expecting for something like this to happen, even if it goes a bit lower, testing these levels, because this is technically the same zone, right? It makes sense to give one more push lower. This is H1. One more push higher, sorry. So that's basically the idea, right? After this push down, you can continue following at least as long as that zone would be holding. Short term, I think it makes sense. Then you can be looking for another level. There is the trend line right here. This is the low, right? So now we have two zones. Now you have this one. Let's see if we extend it. The top line would be somewhere in it. Yeah, I think that would be the level, right? And now, if it starts going lower, what I will be looking for is this kind of ABC to form here, okay? Possible false breaks, no problem with that. But if it starts going below this zone, if it starts going below it, where was that? Something like this, right? And it holds below like this kind of breakout here, or this kind of move, strong breakouts, or this kind of move, you see, breaks, holds for a few candles, and then it starts giving the pullback. This is not good. That usually means continuation, especially if it holds the breakout zone. In this case, it would be here. Anyway, enough about this one, I guess. I'm drawing. Okay. I guess that's about euro pound. And BTC, right here we have the idea for the sell. What we were following, at least what I was following, and I gave what as well, was for Bitcoin pretty much for the 43K level, this one, the spike, to hold. I believe what's idea was 43, 45 to hold, which is slightly bigger range, basically this one, right? So he's giving it a bit more room to false break or anything like that. But in general, our idea was as long as this thing holds, we would be expecting for the price to push lower. And also, I was expecting for this to turn into a consolidation period before the next breakout, up or down. And this is more or less exactly what we managed to get during the week. This is a beautiful setup the way I see it, because if you're expecting a range, getting this divergence on the MAs even is absolutely fantastic. Notice that on the 1 hour chart, this is the most recent high from the previous push up. So push, down, up, right? On this wave, inside this wave, you have three highs, right? This is the actual high, but on the way lower, this is your third high here. And even this one is being respected during the push to the upside. Bitcoin, I think, is one of the clearest setups, especially when you put it together with the overall structure on the higher time frames. I think the divergence here is fantastic. You have the two waves, you have the levels, you have the Fibonacci levels, you have the structures. I think it was a very good example of divergence ante. So that's going to be everything for this week. I hope you like this mixture of ideas, and this way actually you can see what we're looking for, especially when it comes to diversification, right? Pound cut looking for buys. The divergence is giving you an entry right here. I think we had 1 pound cut. Sorry. Here, there you have it. On the 26th. This one is on the 24th. The direction remains the same. The direction is bullish. This one is losing. The other one is making money, you see? So this is exactly what I was referring to in the beginning of the video. Anyhow, have a wonderful week, everyone. Keep in mind, holiday in the US today, so probably low volatility again. Might be a good idea to just sit down and relax and don't really trade. If you have any questions, let us know and we'll get back to you as soon as possible. Okay, guys, have a good one.